How to start investing in stocks as a beginner. Why should you invest in stocks? Investing in stocks is one of the most effective ways to grow your wealth over time. The stock market has consistently outperformed other investment options, such as bonds and savings accounts, offering the potential for higher returns. This growth is largely due to the power of compounding, where your earnings generate more earnings over time. Starting early amplifies these effects, as even small, regular contributions can grow significantly over decades. For example, investing $100 monthly at an 8% annual return could yield over $150,000 in 30 years. Beyond returns, stocks also help beat inflation, protect your purchasing power, and diversify your financial portfolio. Building the foundation for investing. Before you start investing, it's essential to lay a strong financial foundation. Begin by setting clear financial goals. Are you saving for retirement, a major purchase, or simply building wealth? Defining your objectives will shape your investment strategy. Additionally, assess your risk tolerance, your ability to handle market fluctuations without losing sleep. Younger investors may lean toward aggressive portfolios with higher risks, while older individuals might prefer safer, more conservative investments. Don't forget to establish an emergency fund, which serves as a safety net for unexpected expenses. Experts recommend saving 3 to 6 months of living expenses before you start investing. Choosing the right tools. Choosing the right brokerage is a critical first step. Many platforms cater to beginners, including Fidelity, Robinhood, and E*TRADE, offering features like zero trading fees, fractional shares, and educational resources. Fractional shares allow you to invest in high-priced stocks with as little as 20. For those who prefer automated solutions, robo-advisors such as Betterment and Wealthfront are excellent options. These services create and manage portfolios based on your preferences, simplifying the process for a small fee. Additionally, consider the type of account to open. Taxable accounts offer flexibility, while retirement accounts like Roth IRAs or traditional IRAs provide tax benefits depending on your financial goals. Starting your investing journey. To begin investing, open and fund your brokerage account. Even with a small budget, you can start by purchasing fractional shares, making high-priced stocks like Tesla or Amazon accessible. Once your account is funded, focus on choosing the right investments. Low-cost index funds or ETFs are ideal for beginners, offering broad market exposure and diversification. Alternatively, consider blue-chip stocks, which are shares of large, well-established companies like Apple or Microsoft. These stocks provide steady growth and stability. Use free tools such as Yahoo Finance or Morningstar to research stocks and funds before making decisions. Strategies for long-term success. Successful investing requires discipline and a long-term perspective. Dollar cost averaging, which involves investing a fixed amount regularly, helps reduce the risk of market volatility by spreading out purchases over time. Diversification is another key strategy. By spreading investments across different sectors and asset classes, you minimize the impact of poor performance in any one area. Additionally, reinvesting dividends can accelerate your portfolio's growth. Dividend-paying stocks distribute profits to shareholders, and using these payments to buy more shares enhances compounding. Common mistakes to avoid. Beginners often fall into avoidable traps when investing. Emotional decision-making, such as panic selling during market downturns, can lead to significant losses. It's important to stay focused on long-term goals. High fees are another common pitfall. Avoid mutual funds with high expense ratios and instead opt for low-cost index funds or ETFs. Overtrading, or frequently buying and selling stocks, not only incurs fees but also undermines long-term growth. A patient, steady approach often yields better results than trying to time the market. The importance of starting early. Starting your investment journey as early as possible offers numerous benefits. The power of compounding allows even small amounts to grow substantially over time. Early investing also provides financial flexibility, reducing stress during life's challenges. Whether saving for retirement or building wealth, the sooner you start, the greater your financial security will be in the future. Delaying may cost you valuable time that could have been used to grow your portfolio. So, investing in stocks doesn't have to be complex or overwhelming. With the right tools, clear goals, and disciplined strategies, anyone can start building a brighter financial future. Remember, consistency and patience are your greatest allies in this journey. So why wait? Open your first brokerage account today, and take the first step toward achieving your financial dreams.